said, I mean, home builders, and we've talked about it on the show, it's the supply-demand fundamentals, or the imbalance has been there for a while. So people tried to sell these, trying to get ahead of something late last year, and they realized that, wait a second, these are very still strong companies, strong balance sheet. And again, the supply-demand fundamentals are in place. Pulte Homes, a week or so ago, made not a 52-week high, an all-time high. DHI within percentage points of it. So despite the underlying weakness in the economy, in the market, the home builders are still a place you can hide out, I think.
After the price numbers today, Tim, you agree?
Yeah, well, I think there's a bit of a lag effect, and I think there's just not a lot trading, right? The velocity of the industry is down. But I agree with Guy, and Guy's had a great call on this. And if you look, though, I'm going to point it more to really what's going on with interest rates. I mean, when we peaked at 4.20 on the 10-year on October 22nd or 3rd, you had Lennar basically at a 6-month low or 2-year lows, and since that point, it's up 49%. The other thing I would point to is we actually have seen some construction costs go down. I know you're not seeing it in Home Depot yet. You're not seeing it anywhere you look, but lumber prices are at 5-year lows. Strand board have, come way down. And so when you hear from some of the builders, they're talking about profitability, that even if you have single home family starts down 15 to 20%, their EBITDA and their margins are as good as they've been during this run. And I think that's what it is. I still think it's interest rates.
Labor availability be one piece of this, but
right.
Any skepticism coming from anywhere?
I mean, if you think about the home builders versus the last home building crisis, right? They were just way out over their skis. They had so many lots of land. They were so over-levered. The balance sheets looked terrible. This is a complete, and the supply-demand dynamic was way out of whack. Fast forward to where we are now, it's a totally different story, and I think people are so spooked to be in the home builders that now you can see, all right, well, even though they've traded up, it's not like they're crazy expensive, and maybe rates have peaked. And if that's the case, then you generally want to buy them before they actually, rates will be down 6 months from now, and that's maybe where they're looking at.
What about bank lending, though? I mean, we get to a place where, there's so many different interpretations. I know we're about to have a bank discussion. So, but if you think about lending and think about where mortgage standards have gone, and do you think that banks are going to be putting out more mortgages? Do you think they're going to be taking on more risk here? I don't think this helps. And again, I'm as much as I'm pointing out that this move has been massive, this is not a move I'm chasing. It's not a move that I think is really that sustainable. I don't think the consumer's getting stronger in the next 6 to 9 months to go out and buy that house. And I don't think rates go down that much.
Jeff, I wonder if the profile of the winning home builder is changing because of remote work, because of what may or may not happen to commercial real estate, and people's ability to telecommute. I mean, is the total sort of urban center home builder going to be a winner again?
I think it's more price demographic than anything else. I mean, if you look at the demographics of the United States, for example, you have that prime home buying age somewhere around 30, 31, 32. That's the biggest cohort of our population. So when I think about what home builders might do the best, I think it's that mid to lower end, the D.R. Hortons of the world. Guy mentioned it. But I am a little bit skeptical. So we're in this, and Tim mentioned it relative to interest rates. So we're in this kind of Fed pivot window. It's right before the Fed pivots, sort of during it, and then right afterwards, where you often see a bump in housing data, a bump in home builders. The question is what happens after that? Do you have the proverbial soft landing, or do you go into a recession? So my guess is the economy continues to deteriorate some, and that's going to be a drag on the builders. You had that huge rally up 40%, right to 70 in the home builders ETF. That's clear resistance. It failed there. So that doesn't make me feel great. But the one thing I will say, and I was saying this a lot last year, rates probably have peaked. So I think that's good to some degree. But if you look at the history of home builder performance, they do the bulk of their underperforming prior to recessions. Even in 2008, they outperformed the S&P 500 during the actual recession. So I think you take some comfort in that. You might see some volatility here going forward, but the bulk of the underperformance actually might be behind us.